Hi there. Today I'm going to share with you the most economic way to invest and produce quality performance. Why? Because I'm tired of seeing investors waste good money paying high fees on active funds that continually deliver poor performance. On average, most growth or active investment funds, that's a fund that trades regularly to beat a particular index, such as the ASX 200, charges approximately 1.3% to manage an investment portfolio. This covers large salaries, management fees, commissions, brokerage, and even advertising. Evidence suggests that on average, most active investment managers lose out to low-cost exchange-traded funds, or ETFs, after fees and expenses. Independent studies detailed in The Power of Passive Investment by Richard Ferry suggests that of a portfolio comprising of 5 active funds, there's 15% chance of beating an index over a 5-year period, 8% chance over a 10-year period, and only 2% probability of beating an index over a 25-year investment period. The conclusions drawn in these studies were recently reinforced in the Spiva Australian Scorecard prepared by S&P Dow Jones McGraw Hill. The scorecard reports on the performance of active managed funds versus standard benchmarks. The report concludes that the majority of active funds in all categories, excluding small companies, were outperformed by the respective benchmarks over a 1, 3 and 5-year periods to June 2014. It showed that 66 and 75% of Australian large company active funds underperformed the ASX 200 index for the past 3 and 5-year periods respectively. The evidence is overwhelming that lower cost index funds perform better and typically generate higher returns than active managed funds. Passive ETFs such as the iShare MSCI ASX 200 costs as little as 0.19% to invest in, making an equivalent active managed fund over 600% more expensive. In short, when considering an investment fund, higher fees don't necessarily translate into higher returns. It's not the same as paying more for a better bottle of wine. It's important for every investor to consider having exposure to ETFs or index funds. If this is not the case, maybe you should be asking your advisor. Our team is passionate about delivering low-cost, quality-performing investment advice for clients. If you'd like to know more, go to our website or contact our office to speak to an advisor.